what's up? It is Wednesday, June 17th. Yeah. So what's going on? What's going on? Hey, John Bolton's book came out. You probably heard John Bolton was a former national security advisor. Personally, I think he's an unhinged warmonger snake. But, you know, I was shocked when Trump brought him on. I didn't think the two were going to get along, and, you know, it didn't work out that way. But he's out with this book and a lot of dirt on Trump, saying that things like the Ukraine situation was the tip of the iceberg in terms of like impeachable offenses, and he was trying to get China, Xi, to help him win the election in 2020 and all this other stuff. So I don't know if that's going to have any impact on the markets. I mean, the markets look at Trump in a bullish context. So I think as he slips in the polls, there's a chance that it could have an impact on the markets, a negative impact on the markets. So far, it hasn't. I mean, he's down in all the polls. He's even down in the important swing states. I just thought that I would mention that. Let's talk a little bit about tax flows. Today, very interesting from the daily Treasury statement, employment and withholding tax deposits are now negative year over year. That's the first time I've seen that happen, I mean, in years, actually. So those tax deposits, employment tax deposits, and those are, you know, that's payroll taxes. That's not, I'm not talking about people filing their income taxes. You know, that happens next month, but the payroll taxes come automatically out of payrolls, and it is now negative year over year. That has not been the case. I mean, it's been declining, and I've been telling you about that, but it has always been positive over last year, but now it flipped negative. What this means, if anything, hard to say at this point. It could also have something to do with these tax payments being deferred to a certain extent. I know somebody sent me a link to an article that said that the IRS is allowing companies, businesses to defer those payroll taxes, so that might have something to do with it. Or, you know, I did see in May what looked like the beginning of a little bit of stability in that year-over-year trend. And actually, you may recall, I did a video on that actually, and then that kind of faded away. It just went right back down into a downtrend, and that downtrend has been accelerating on the downside. Let me talk a little bit about the EIA report, the weekly Energy Information Administration's weekly petroleum status report. As you know, I cover that in detail every Wednesday when it's released. A couple of things. Number one, a very, very big drop in domestic oil production. We got a 600,000 barrel a day drop in domestic oil production, bringing it down to 10.5 million barrels a day. That is all the way down from 13.1 million barrels a day in February. So in February, 13.1 million barrels a day. We have seen a 2.6 million barrel a day drop in U.S. oil production. You know, the interesting thing is that inventories are at an all-time record high. We have not seen crude oil inventories come down in the least. As a matter of fact, they've been building up again, and they just made a new all-time record high. It was an all-time record high last week, another all-time record high this week. So, and by the way, this is happening even as imports, you know, if you look at imports, they're down like 15-20% year over year. So imports are way, way down. Oil production is way, way down. Yet oil inventories at an all-time record high. We also saw a dip in gasoline demand for the first time in 4 weeks. And that's another thing. See, if I'm pointing to this slowdown in employment and withholding taxes that really, like I said, in May, it looked like it started to get some stability in there. Then it just like headed south again. And now we see a dip in gasoline demand. So I don't know. All I'm saying is that the market is at near an all-time record high. The market is kind of forecasting an economy as good as it was pre-COVID. I think that's a little optimistic. Now, in general, I am an optimist on the economy and the market. I think there's still a lot of fiscal out there that has not yet really been injected into the economy. I mean, it's sitting in bank deposits. But I spoke about that too in my other video yesterday. I said bank deposits were down for the first time in 10 weeks. So what that means is that loan creation, all right, the Fed's monetary operations, in other words, the Fed's action of adding reserves in the system, and there was one other thing. Oh, and government spending is now not offsetting the draw from treasury sales and taxes. We have a decline in deposits for the first time in 10 weeks. And I always talk about deposits as being the cash on the sidelines. You know, all this talk about the Fed, I mean, when I read this stuff, I really have to laugh because, you know, when the people are saying, oh, the Fed is pumping up the markets and they're, printing money and liquidity and the market's going up because of the Fed. I mean, ultimately, the market is going to follow the economy. If the economy is good, you're going to have corporate profits, and corporate profits are going to grow, and stocks are going to go up. And I say this, I'll say it again. The Fed can only lend, it cannot spend. So whatever the Fed does, it's all, whenever when you're saying it's pumping money, it is also taking out an equivalent or greater amount of some asset. And it could be money in a different form, like a treasury security. What's a treasury security? A treasury security is a dollar that has a term, like, 30 days, 60 days, a year, 2 years, 5 years, 10 years, and it has an interest payment attached. So the Fed's taking that away, and it's putting a cash balance. Or the Fed will lend against some collateral, so and it'll lend against that collateral at some discount. So let's say you have some collateral, whatever it is, a treasury, a loan that the Fed is going to buy from you, you get the cash, but that loan is going to be discounted by some percentage. So you're getting less than the value. It's giving you cash, but less than the value. So your net worth, all else equal, has actually gone down, man. So like all this stuff about the Fed, that's not how it works. Now, the fiscal, now that works. When the government gives you a Social Security check, or it sends out a $1,200 check, or it's an unemployment payment, I mean, that's money in your pocket. That's yours to keep. It doesn't come with some offsetting liability. So like when I hear all that stuff, man, I'm cracking up. I'm laughing. Like I'm selling into that. When I hear all that stuff, I fade it every single time because these people don't know what they're talking about, folks. Look, I am the only one who has an applied approach to MMT. Nobody else has that. There are a lot of MMT academics out there. They talk about MMT. They don't apply it to investing and trading. If you want to learn, if you want to elevate yourself, if you want to gain knowledge and insight, if you want to gain mental game, like I did a whole thing. By the way, my new podcast is out. The link is right here in the description below. Go check out my new podcast because I talk this time about mental game. Like you got to have mental game. Otherwise it's not going to work out. You're like, oh, MMT, it's fantastic. Hey, I understand it. It's going to be so exciting. I'm going to apply this. Yeah, that's great. I want you to do that. But you also have to develop mental game. Otherwise, it's not going to work out. All right, go to my website, sign up for a 30-day free trial of MMT Trader, and also check out my podcast. The link for both of those things right here in the description below. Click on it. Bye.